One of the top chip analysts on the street. Qualcomm, let's start there. Bump the dividend today. What's your reaction?
I'll be honest, I didn't have much of a reaction. I don't think it was hugely unexpected. I had 80 cents in my model. It's kind of in line with the typical magnitude of the dividend increase that we've seen out of them in prior years. So it wasn't unusual. You're probably comparing it with like Intel, who obviously just cut their dividend. I mean, Intel's kind of in a special case all by themselves. They don't have any cash flow. They don't really have the money to afford to pay it. Qualcomm clearly does.
Somehow all roads always lead back to Intel with us, doesn't it, Stacy? I don't know what that says about your view of how dire things may be there. But what about the space in general? Mike Santoli to my left here was just mentioning the strength in chips. Is it believable? Is the worst behind that sector?
Yeah, well, so semiconductor investors tend to like to buy the stocks after numbers have been cut. And the best time, if you could time it perfectly, is usually after numbers come down just before they hit bottom. And if you look at where the estimates have been, forward estimates peaked in June. They've come down 30% since then, broadly for the whole sector. It's actually the largest negative earnings revisions we've had probably since the financial crisis, so it's been pretty big. I think right now people are playing the sector broadly for the second half recovery and China reopening, and it's March, so you can do that now. We'll see what happens as we get through the year. At some point, we'll have to actually see it in the results, but for now, you can play that. I think there's also a broader trend, though. People are getting very excited about some of these more secular trends, especially artificial intelligence, generative AI, and ChatGPT. And I saw the little leader down there. It said the top S&P 500 stocks are Arista, AMD, and Nvidia. Presumably, those are all going to be AI kind of plays. The thing is, when you sit down and you start to actually size what this could mean for some of those kinds of stocks, particularly a stock like Nvidia, that opportunity could be very big. And it may not be the next 6 months or 12 months, but if you're starting to think through a sector that is bottomed and looking for those longer-term, broader secular plays that could really drive upside to expectations and multiples and ideally the stocks, I think those are some of the trends and drivers that are capturing people's attention now. It's one reason some of these stocks are doing very well.
Don't answer this next question based on your sort of big world, big picture, longer-term perspective view, but answer it for me based on where both stocks are today. That leads me to Nvidia versus Qualcomm. I know two stocks that you like, but which is better today? And it's kind of a loaded question, right? Because look at what Nvidia has done year to date. Is it attractive today?
Yeah, you bet. So it depends on what you're looking for. Nvidia clearly has done very well year to date. It's up 60% plus year to date. And I think that one can still work. I actually really do I like it right now, and I like it for the long term. Qualcomm's a little different. Qualcomm has done okay year to date, but it's probably underperformed the space. It's a smartphone. It's perceived as a smartphone play. And anything touching smartphones, I said this before on air, but anything touching smartphones has been kind of death. But if you're looking for at least a back half recovery play, tactically, I actually think Qualcomm fits the bill. I mean, handsets did not benefit from COVID. They were just lousy the whole time. Fine. So at least I don't have a ton of demand pull forward to work off like I have in PCs. I think a lot of the weakness was due to China. And so if China is going to reopen like that, that's actually a positive in the back half. Qualcomm kind of put the bottom, and also they guided March quarter flat for handsets, usually be down pretty significantly seasonally. So that kind of sort of tells you the bottom at least is in. We can argue when it starts to pick up, but it probably doesn't get much worse. They guided, $2.15 in earnings, annualize it, call it an $8 plus kind of trough number. It's like 14 times on that. And, right. You're kind of looking for, there's even a broader non-handset story there that is really, really good. The stock's very cheap while you're waiting for it. So on those kinds of dynamics, especially if you're playing for a back half recovery, I like Qualcomm. If you're playing a broader secular trend, I like Nvidia.